Welcome everybody. My name is Seth and I am the creator of Easy Algo. It's a set of 3 different indicators and 2 of them are price action indicators and the other one is an oscillator. And in this session today, I'm going to take you through each one of them. I'm going to start out by just walking you through each indicator, talking about the components and the benefits and how it actually works. And then if you've got any questions, you can ask some questions. And then in the last piece, we'll focus on maybe showing you some strategies and showing you how effective and helpful these tools are in the market. So of the 3 indicators, I've got this one that you see on the screen now. This one is called Indicator X. And basically, this is a price action indicator. And if you don't know the difference, most indicators out there are lagging indicators. They repaint, they give you the information when it's actually too late. And oftentimes if you trade with those indicators, you end up buying when you should be selling or selling when you should be buying. So if you're going to use an indicator, make sure that it's a price action indicator. This indicator over here, Indicator X, what you're seeing over here is it is showing you the cycles of a market. You can see these squares that are produced here are called contraction boxes. What this indicator is doing is it's marking out contraction boxes, which is basically just noticing certain movements in price action. If we get into some technicals, I can show you quickly. What it's doing is it's actually measuring whenever you see a lower high and a higher low in the market, like this. It's real simple, actually. So whenever you get this lower high and this higher low happening, let's just say over there. So this high would be lower than this high, and this low would be higher than that low. Then what the algorithm does is it draws a box around it. Now, it doesn't look too fancy, but this is actually a very important area to become aware of because this is letting us know when contraction is occurring. It's kind of a tightening of price. So what this indicator is doing is it's marking out the 3 phases of a market cycle. The first phase is the contraction where you get the boxes. So let me show you over here exactly how it works first. And once I show this to you, it's going to completely change the way you see the markets. So what happens is price goes into contraction. Then we get this contraction box being formed. This is what we call the first phase in the market cycle. So phase 1, the contraction phase. The market is actually operating in 3 different phases. And this is happening in every asset, whether it's crypto, forex, stocks, and it's happening in every single time frame. Because what happens in the macro happens on the micro. Then what happens is we get this contraction box, okay? This is the contraction phase. This is when price goes into a tightening. It's when there's low institutional volume. It's when the buyers and the sellers equalize in the market. And we call this the fair value level. And what the indicator software does, it'll mark a line out the center of this box. And we call this the fair value level or the value line, or we call it the zero gravity level. And I'll explain in a few details why that is. Once we're in the first phase, guys, this is so important to realize. Once we're in the first phase, this box here is a leading indicator. These Easy Algo indicators are leading indicators, which means they tell you the future. They let you know what's going to happen before it's going to happen. That is why price action indicators are so incredible to trade with. So once we see it go into contraction, we know it's the first phase, and then we know what's going to happen next. We know the second phase is coming next, which is what we call the expansion phase. This is where price breaks out of the box and it starts to whipsaw and oscillate around this value line. So we know once we get contraction, we know expansion will happen next. So let me just write here. So this is phase number 2. This is the expansion phase. Expansion phase is the phase where most retail traders lose their money because it's also known as the manipulation phase. And once I show this to you, you're going to see this everywhere in the charts. It repeats itself over and over again. If you understand how the market makers trade or understand how the big players trade, this is their formula. This is what they use to trade. Because a market maker, they're the ones who move and drive the market. And they enter with very big high position sizes, which means they can't enter like a retailer. They can't just enter in one position. They have to break their entries into multiple positions. So they create a framework like this, which I'm going to be presenting to you now, in order to extract liquidity from the retailers to fill their massive orders, to fill their position sizes. This is why the expansion phase is also known as the manipulation phase, and this is where they collect money from the retailers. And I'll show you exactly how that works right now. So what happens is we get fair value. This line over here gets produced, and they oscillate around this line. The price breaks below, and what they do is they'll break price below with a big candle. So everyone suddenly thinks the market is going down, and they enter their short positions over here. Then the market turns against them, shoots up and liquidates them. Then as price gets above this value line, the retailer starts buying again, and they turn around, they liquidate below. As it gets below, the retailer starts selling and they liquidate again. And basically they just keep trapping and confusing and tricking the retailer to make the wrong decision in their trading. Because how they get their positions filled is they need the retailers to make a mistake in the market. When the retailer makes a mistake, this is where they enter the market. So they have to trick you to making a mistake. When you make a mistake, they use your liquidity to fill their position sizes. So then this whipsaw will occur usually 3 to 7 times around the value line. Once they've filled all their position sizes, it goes off into the third phase, which is the trend phase or the profit-taking phase. So we've got these 3 phases happening on all time frames, and you'll see when I take you on the charts now that I've shown you this. So this is the third phase, phase 3, the trend phase. Once you understand that these 3 phases are happening in the market, you can actually improve your trading massively because you'll know what phase you're in and you'll know how to trade according to your phase.
This
When you're
is,
in the
is when people get stopped out on the phase 2, and very
yes,
often they miss the phase 3. And when phase
yes,
3 is moving away, they're trying to chase it with again. They get so. This is very, very, very important and very, very absolutely beautiful presented. So I hope people can understand the importance of phase 1, phase 2, and phase 3. You need to understand how to play around with phase 2. It's absolutely diamond, diamond.
exactly. It's so important to know because if this is the phase where most people lose their money and they get manipulated, if you understand how this phase works, then you know how to stay on the safe side of this phase. And basically with the easy algo indicator X, this is what this one's called. When price is below the value line, this is the only place we're looking for our long entries. So we know if price is undervalued, we're safe. As soon as price gets above value, we do not want to enter our longs because we are a little bit late into the trade. So for instance, there's many ways we can trade this, and I'll take you on the chart and show you. But we want to enter our long positions under the value line, and our short positions, we always want to enter above the value line. But this also just depends on the movement of the market. You know, if we're in an uptrend on a higher time frame, we're only going to be looking to enter when price is underneath these value lines. Because if we had to enter below here, or below here, or below here, it is the optimal entry. So when price does go into the third phase, we're just catching that wave into the trend phase. So it's all about timing and just understanding what phase you're in and how to trade that phase accordingly. So now let me take you onto the charts and show you exactly how this works with the indicator. And I'll explain in more detail exactly what you're seeing. So basically over here, all these boxes are contraction boxes, which is showing you the first phase occurring. Then we get the value lines. And then these little lines over here are basically liquidity lines. They're showing you the stop loss levels So it's potential areas to enter or exit your trades. You know, the key to being a consistently winning trader is being able to trade in alignment with the market makers or in alignment with the big money. And this indicator is designed to keep you in alignment with the big money. The stop loss levels, which are the liquidity lines, are basically what the market makers are targeting. These are the areas where they actually enter their positions because they know that there's resting liquidity in these regions. And this is why you must have heard about these stop hunts, you know, always going for the liquidity, because in order for them to fill their positions, they've got to go to these levels. So let me give you an example of how this process is working. Once we get the first phase start over here, you see the contraction box, we get the first phase. Now we know exactly what's happening and what's going to happen next. Then you can see at this point, price breaks out with this FOMO-induced candle, and it shoots down to take out this liquidity. A lot of retailers who don't understand this, they will enter their short positions because they think price is going down. But this candle, this FOMO-induced candle, is designed to trick you into making the wrong decision at the wrong time so they can fill their positions. So everyone goes short over here, and then they go long, and they use your liquidity to fill their long orders. Then price goes up again, and you can see the same thing would happen here. So price oscillates around these value lines. You can see sometimes it's more than other times. Over here, breaks down. These value lines become these magnetic levels. Let me go on to, oh, here's a good one. Here's a very good example here. So you can see we get contraction, and then we get this whipsawing, and it creates this funneling out movement. Usually this is how it works, and it starts out as these very small whipsaws, and as price gets further from contraction, the waves get bigger and bigger until eventually it shoots off into the trend phase, which is here. This is would be the trend phase happening here. So we got phase 1 occurring over here, phase 2, the expansion phase, and then phase 3, which goes into the trend phase. So this software is marking out these phases for you, and it's keeping you on the right side of the market. If we look at this from a higher perspective, you can see we are in an uptrend. You know, and there's many methods to identify the bias of the market. Once we identify the bias, we know with the indicator X, when is the best time to enter, which is below the value line. So for instance, we can see our entries would have all been underneath the value line, underneath the value line. These would have been all our entries for this trade. This would have been fantastic over here because we could have entered at any one of these levels. You can see, look here, this is actually a perfect example. Price comes and takes out these liquidity. Can you see it comes down, takes out liquidity, takes out liquidity, takes out liquidity, takes out liquidity, takes out liquidity. See, so this is a perfect example. And look at the top, all the liquidity is being taken out. So it's going into this whipsaw expansion phase, taking out all the liquidity. You can also see we've got these liquidity candles, these reversal candles, showing us exactly what is going on. And because we are in an uptrend, we would have entered every time price came below the value line and took out a liquidity level. So these liquidity levels can show us the price, the precise location under the value line where we're going to get this rotation and price is going to go back upwards. If we had got it in onto any of these levels and then just held our trade, it would have taken us inevitably into the third phase, which is the profit-taking phase. So it really just breaks down and makes more clarity out of the chart for you and understand how do the institutions trade, how do these big players, market makers trade, and this is the methodology that they actually are using. So if we know we're in the contraction phase, we know how to trade according to that phase. And then all we want to do is we want to find out what is the higher time frame bias. So for this strategy, I normally use two screens. I use one of them, which is for the higher time frame. And I like to use the Heiken Nishi candles. Let me just change the charts. So I'll show you an example on another on Solana over here. Once you understand the higher time frame, trading on the lower time frame becomes really easy, especially with indicator X, because it just helps you get these incredible entries. So here you go. Basically, I've got two time frames. I've got the lower time frame over here and then the higher time frame, which is my bias. So if we're working on a 4-hour chart over here, or let's just go into an 8-hour, what these value lines do, they do the opposite on the higher time frame. There's a little bit of details to this, and I don't have a lot of time to get into all of it, but whenever price breaks a higher time frame value line, we get usually a big movement up or down. You'll see over here, price breaks below and we get this big movement down, and price breaks above and we get a big movement up. So these value lines are a fine line in the sand showing you the difference between a bear market and a bull market. Because the institutions, because this line is the fair value line, it represents the 0 point where the market makers balance their book of business. See, with the contraction zone, we get this equalizing of price where the buyers and the sellers equalize and become 0. Then whatever happens past this level, we know that this is the 0 point. So oftentimes price shoots away and it retraces back to the level so the market makers can balance their book of business. But in this example, I'm going to show you this over here. So you can see price breaks above this 8-hour value line. We've got these flat back candles, which is showing this bullish nature. So at this point, we know that we're looking for buyers in the market over here. As soon as we get this candle break, we're looking for buyers. So then if I come over here, and I'm just going to find the exact position on my chart. There we go. At this point over here, we know we're only looking for buyers. So I come onto a lower time frame. So I like to enter on the 5 minutes or the 15 minute, because then we can get really precise entries into this uptrend. We know there's an uptrend happening because we can see it on this time frame over here. And let me just reverse here, just to show you how effective this tool is in showing you the best places to enter your trades. And you can see over here, we would have noticed this at this level. And then you can see, I'm just going to make this a full screen. You can see every time price is below, this would be our entries. We only want to enter when price is below these value lines. And then it breaks above. We've got another one forming over here. And you'll see, guys, this gives you the best entries you will ever get into your trade with the least amount of drawdown, with the least amount of pain on your pain pleasure threshold. It literally just shows you the best places to enter. So you can see over here, we're in a confirmed uptrend. We know price is going up because the higher time frame tells us. And then indicator X just shows you the best places to enter into that uptrend. And usually this is in the expansion phase when price is below the value lines. Those are our safest places to enter the trades. All right, that's a short intro with Trend X. Now I'm just going to, with Indicator X. Now what I also use in combination with Indicator X is another indicator of mine, which is called the TDIX. And this we use in combination with Indicator X. It helps us get even more precise entries into or underneath these value lines. So like for here, price is below the value line. We know we're looking for an entry, but we don't know where's the best place to enter. So if we look at Trend X over here, we can see it shows us a divergence. And divergences are showing a strong sign of when a reversal will occur underneath the value line. In the next example, we see here, we call this a shark fin. So shark fins are when this white line breaks through this blue band. This is also showing us high chances of reversals. So whenever price is under a value line, we're looking for either divergence on the oscillator or we're looking for a shark fin on the oscillator. This just helps us get more precise entries. It's not always going to 100% show you those, but we use it just, the more data we get in our trades, the more we can make informed decisions and inevitably just enter at the best positions we can get into. Then over here, you can see we got a divergence. This would have been another entry. Over here, we got a little mini shark fin at this point. Here, we didn't get a shark fin, but also if you look at the oscillator, you can see the bands. This is a Bollinger Band. We're getting the squeeze happening. And when we get the squeeze happening, we know there's volatility about to occur, so we can anticipate that we're going to go into the third phase. So you can see here, guys, this is so cool. We got the contraction phase, the expansion phase, and then we got the trend phase. And you'll see no matter what time frame I go onto, you will see this pattern playing out over and over again. But then let me go a little bit more into the TDIX. So the TDIX is based on some very, very, very helpful indicators. We've got multiple indicators I've added in here. I've got EMAs, RSAs, Bollinger Bands, which are all working together to give us information. When price breaks out of these bands, you can see the dot. These are high reversal areas. So this indicator is just showing us the most likely time price will actually reverse. And you'll see if we come on here, bear in mind, we have to trade according to the trend. So because we're on an uptrend, we're more than likely to rather go with the divergences. And if we've gone just with the oscillator, not even looked at indicator X, you can see that would have been an entry on the divergence. This would have been an entry on divergence. And look at that. This would have been two amazing entries into this uptrend, just going off this one indicator. So this indicator has taken me months to put together, and guys, it is extremely, extremely accurate. Let me find you some more examples. Here would be more examples, so you can see all the value lines, and we'd buy underneath the value line. We got a shark fin over here, so it's another buy point, and it's taking out liquidity levels. So you guys, we've got multiple confluences. We're looking for liquidity being taken out. We're looking for the oscillator giving us divergences or shark fins. And this is just giving us a full toolkit of information that helps us get just the best entries into our trades. So now I'm going to show you the third indicator. So I've taken you through now indicator X, which is this institutional levels. I've taken you through the basics of the TDIX. And now I'm going to take you through TrendX, which is an incredible price action tool. This is also a leading indicator. It shows you the future. It shows you what's going to happen before it happens. And I'm going to explain to you in detail now how we're able to decipher that. So what we're looking at over here, we're looking at pivot point grids. Over here, these blue lines represent pivot points. These are showing us very high probability levels where price will bounce from, where price will actually make a movement from. Not only that, it's also showing us the dividing point between a bullish and bearish market. If price is above the pivot, it's bullish. If price is below the pivot, it's bearish. So it helps you identify what is the trend of the market. And all of these indicators work together. I like to use TrendX in combination with indicator X and the TDIX. They all tell a story and they all give you a lot of information to be able to make very excellent trading decisions. But what is incredible about this indicator? Notice the difference here. Can you see at this point, we've got a very wide grid. And this is known as the central pivot range. So it breaks the pivot into a range. And then notice here, we've got a medium one. But then look at this grid over here. All of a sudden, we've got this super tight grid. When we get a very wide grid like this, this means we're going into a ranging market. And if price is above the grid, we know it is a bullish market. So for this grid over here, it is a bullish market and a ranging market. Now with this indicator, you can see we've got these grids, and the grid opens at the start of the market. Then we've got these blue lines which measure the high of the market, and the blue lines are the low of the market, and then it shows the close of the market. So this one grid is measuring 1 day's worth of information based on the previous day's price action. It's printing out these key levels based on what's happening in the previous day. So every day the day ends, and then it shows you the key levels based on that day. So you can see on this day over here, we got a very wide grid. This is not recommended the best trading day. The days you want to look for to enter is when we get these very narrow grids. Can you see? It's very narrow grid. The narrow grid tells us that we're entering into a trending market. So as the day opens, guys, this is what's so amazing about this indicator. As the day opens right over here, as soon as the day opens, you can see this grid immediately. And at the start of the day, it will tell you what is going to be the quality of the market that day. So it's giving you information in the future. It's telling you what's going to happen in the future before it even occurs. And this indicator, guys, is super accurate. I'll show you a few more examples so you can understand. So as this day opens over here, the day would have opened at the opening of this grid, these lines here. And then we can see price opens just on the grid and above the grid. So we enter our trades when price is above the pivot, just on the grid. Our precise entry would have been over here. Stop loss would have been just below the previous swing low. And then we've got target points plotted out. This indicator marks out the targets for you. So you can see this blue line represents the previous day high, which becomes target number 1. And then we've got target number 2, which is resistance 2, and target number 3, which is resistance 3. So it's plotting out support and resistance levels, previous day, previous high, previous low from the previous day, and pivot points, which is these points we look to enter. And then you see we would have entered over here, and we could have taken profit just at this level, or resistance 2 or resistance 3. And you see it did end up hitting resistance 3 over here on the next day. So it also depends how you like to trade. This indicator comes with 3 different grids. So we've got the daily pivot, which is for day trading. If you're just a scalper and you want to just go in and out of the market every day. And then it's got the weekly grid, which I'll put on for you, which is just giving us more information. So we use the weekly grid on a higher time frame. The weekly grid we use on a 1-hour time frame. And this is if we want to do more swing trades. And then we've got the monthly grid, which is if we want to also do bigger swing trades, which we use on an 8-hour time frame. So you can see over here. So now on a higher time frame, and we always start on the higher time frame, and then we can determine where the trend is going. So look at this, guys. As price got on top of the grid over here, it moved, got on top of the grid. If we had just entered on top of these pivots, we would have got fantastic positions in Solana. And you can see all the targets we hit. Target 1, target 2, target 3 hits. Target 1, target 2, target 3 hits. And now you can see price is stuck in the grid. When price is in the grid, these are not favorable conditions on this monthly time frame. But look here, I want to show you the difference between these grids. So this, because we're on the monthly grid now, it's measuring 1 month's worth of data. So this is 1 full month's worth of data. It's showing you the high of the range, the low of the range. So this is the previous month low, previous month high, and then it's showing you the pivot point. And then based on the size of the pivot, whether it's wide or narrow, it's going to tell you the conditions of the market. And as you can see, we had a wide grid, which told us that it was going to be a ranging market. And have a look, guys. It was ranging this month, completely ranging. Now we go into the next month and look at the difference in the sizes of the grids. Can you see that all of a sudden this grid is much smaller and we've got a tight pivot? So as this month opened, it was letting us know that this was going to be more of a trending market. And if we go into a lower time frame over here, you can see as price got above the grid, look how price just burst up into this trend. So this indicator really gives you insight into the conditions of the market, the movement of the market, and how I like to use it for even more precision. I like to overlay a few of the indicators on top of each other. So I'll show you this. If you ever have issues understanding the bias of the market, this indicator will change that forever. It'll help you identify where's the market going, what's happening in the market with ease. So like if we just look at this quickly, we can see price is above the monthly grid and the weekly grid. So immediately we know it's extremely bullish. As soon as price is above these 2 grids, it is extremely bullish. and we can look to enter our long positions above this grid. And then if we look at the daily grids, which are these light blue, they can just give us re-entries, or if we wanted to trade small trades within this weekly or monthly time frame, those would have been our precise entries. So we can enter on top of, as price breaks above the monthly grid, we can enter the weekly grid, we can enter, and then every time price is above the daily grids, we can start looking for entries until we get a reversal, which could be happening here, and then price will reverse and then continue. But basically, guys, Trend X is one of the best indicators you will ever use in identifying the movement of the markets, the trend of the market, and also finding the best entries. I want to look for, this was an excellent trade. This was actually given out in my group. So, when you purchase these indicators, you get access into my group, and I've got training on each one of the indicators. I do training twice a week, answering questions and stuff. And I also give out signals. I go through and I show you which are the best pivots to trade. So I will find tokens, a bunch of tokens, and I'll find the narrow, and I'll say, guys, these are the best tokens. And this is one of them that I gave into the group. And look how well it responded. Okay, at the time, I was only going off of the weekly grid. So I gave this trade idea in the group as it broke above. You see, I saw this pivot over here, guys, and look how tight that pivot is. As soon as I saw this, and I saw this over here, I sent this out to my group over here. The week had just opened because this is a weekly pivot. So every single Monday morning, I go check out all the pivots. I put all the narrow ones into a category, and those become the best ones to trade. So I sent this out to my group right over here, and I said to them, guys, if this breaks above the pivot, you want to enter this trade. And this trade ended up just rocketing. If I put on all the other details, you can see over here, it broke through. Okay, so it broke through the previous week high. And look at this, guys. This is always a second entry. You can actually have a second entry at this point. You can see it broke above the high, retested it. We could have got a second entry, and then price hit resistance 2, resistance 3, and I never expected it to just blow up this high. But it ended up doing, from the grid, it ended up doing a 200% move. So these grids are pretty powerful tools, especially if you catch these narrow, thin ones. They can really help you get insane entries. If you look at the previous grid over here, even though this grid wasn't that narrow, even this previous grid. So look, guys, you can see price is on top of the grid, and we get this explosive move up. Then we get the next week, price gets on top of the grid, and we get this big movement up, gets on top of the grid. So these grids are just showing you the most likely places where price is going to make a movement. This indicator is also based on institutional trading. And so when price gets onto these pivots, you want to start paying attention, and especially when we get these very small, narrow pivots. Also, another thing to look out for is you can see this pivot is higher than this one. This one's higher than this one. We've got these ascending pivots. When we get ascending pivots, it's also confirming to us we're on an uptrend. And then we look to see is price above the pivot, which is showing this bullish nature. So it's so easy at a glance to look and know, is it bullish? Is it bearish? Should I be looking for longs? Should I be looking for shorts? It clears up all of that uncertainty. And the most amazing part about this indicator, guys, is that this indicator is price action, and it stays the same no matter what time frame you go onto. If I go into the 12-hour, it will stay the same. If I go into the 15-minute, it'll stay the same. So I can be on a 15-minute, and I can be seeing what is actually happening on the higher time frame by looking at where price is positioned on this grid. So I'm on the 15-minute now, but I know at this point we are bullish. So for me, this is one of the biggest challenges I had as a trader was, what direction is the market going in? Is it an uptrend? Is it a downtrend? Is it bullish? Is it bearish? And this solves that. Until price breaks underneath this weekly grid, will I become bearish again? So as long as it stays above the grid, and you can see the next week, the grid opens, it's still above the grid. But see, this was not a good week to trade. I immediately saw this wide grid, and I was like, I'm not trading this asset because it's not a good asset to trade. So what I do for my group at the beginning of every week, I will just flip through all the assets and I will look for all the narrow ones. And then I will compile all the narrow ones into a file, and you'll see I've got them here, weekly narrow. And these become the ones to trade. Like, look at this one. This one was also given in my group. Look here. The start of the week happens over here. Price gets on top of the grid. It's also on top of a daily grid and a weekly grid. And then we get this explosive move to the upside. It did 14%. And then it came back down to the grid for a re-entry. And here was another re-entry. As it breaks the grid and gets back on top of the grid again, these can become 2 re-entries. Or we can re-enter when price is on the daily grid. So this shows us multiple places to enter our trades. And I actually entered this trade yesterday. This was also a signal that was given. I entered on this daily grid. I missed the entry on the weekly grid, so I entered on this grid over here. And it shot up to my take profit one, which was 5%. It really, guys, this will simplify trading for you, and it will completely change the way you trade, because it also lets you know what's going to happen. So every day you can wake up at the start of the day and you can look at the grids. Over here, you can see we're on a weekly tight grid, and now we got a daily tight grid. So we know at this point, this is a very high probability that if we enter this trade as price breaks above this grid, we know there's going to be strong upside. And there was. I knew it was going to happen, guys, because if you see thin grids like this, we know it's a trending market. And we only want to be trading in trending markets if we want to catch these big movements. You know, ranging markets are also good because we can do our farming. But with this, you can understand how the market is moving, what is happening in that specific market. And then you can decide, do I want to trade this market, or am I going to find a better market to trade in? You know, with crypto, we've got coins. So we're very lucky we can actually go through here. We can go through, here's some narrow ones I was looking at today. You can see, I'm going to take off the weekly grid and just show you. So every day I go through scan and I'm looking for these narrow dailies. So this would have been a great one to trade today. Here's another narrow. And you can see, look, as price breaks above it, we get these nice big movements. It always happens like that. Look at this. Price breaks above this grid. We get this big movements because it's a narrow grid. So, yeah, so Trendex it's a price action tool, and it's just showing you these key levels. You can mark these out by hand. There is methodologies to do it by hand if you don't want to use an indicator. But I like the indicator because, look, instantly I've got all my levels I need right in front of me. I can also turn off previous grids if I want to simplify things. And there you go. I've literally just got my day's levels plotted out. And then I'm just waiting for price to get above these grids to look for my entries. I know on the higher time frame we're going up, we're bullish. So it just clarifies a lot of things for me. All right, guys, that was a very quick walkthrough of the 3 indicators. I took you through the TDIX, which is the oscillator for selling and buying. I took you through Trendex, which is our tool that helps with entries and shows you precision for identifying the trend. And I took you through Indicator X, which is our institutional indicator, showing you exactly where's the best places to buy. If there's any questions, does anyone have any questions? I'd love to answer some questions before I just talk on forever. There you go. There's some questions. What is the indicator called? So the indicators, it's called Easy Algo Suite, and there is a link in the description below if you want to find out more information. I'm also offering a 3-day free trial. So click on the link below, check out the trial, test it out, come into the group, say hi to everyone, get some amazing results, and yeah, I would love to hear from your experience. How do you get that value line? Okay, wait. The value line is created based on these contraction levels. So when we get contraction in the market, we get a value line created from that value line. So for instance, if I had to turn the indicator off and just show you how to manually figure this out, say we go to a 1 hour time frame. If I want to figure out how to mark out a value line on this chart without using an indicator. It is more challenging, but you can do it. So we're looking for a contraction in the market, and I'll draw it for you, then I'll show you exactly how to do it. We're looking for where price has a lower high and a higher low. So you can see this is a perfect example of contraction. And this would be the contraction box over here. Can you see, guys? It's basically when we get a squeezing of price. We got a higher low and a lower high. So I'll write it out here for you. It's when we get a simultaneous lower high and higher low. This is letting us know price is going into contraction, and the contraction phase is giving us information of the value line. If I look on the chart, here would be a higher low and a lower high, because you can see over here, this peak is lower than that peak, and this peak is higher than that peak. So this is where I would draw my contraction box over here. And then to get the value lines, we just draw out a line out the center of the box. And this becomes my 1 hour value line. And you can see I'm only looking for my long positions when price is underneath this value line. I do not want to enter long, because as soon as price gets above the value line, there's going to be more risk involved. And guys, we're looking for the best positions to enter into the market. So that is how we figure it out. If I had to go into a few other examples over here. So we're just looking, I mean, you can practice on your chart. We're looking for high lows and low highs. Sometimes they're a little bit harder to spot. Let's go into a 4 hour. Here we go. This looks easier to work out. So over here, high, low, low, high. Here we go. We've got one there. This is not quite one. Here you go. This is one here. And once you practice, it becomes easy. Initially, it can be a bit challenging. This would be an error right here. Another thing to look for, because we know the expansion phase comes next, we can just look for areas where there's whipsaw. So we're looking for contraction. I'll draw it out for you. We're looking for this contraction box, this tightening of price. And then we mark the box. And then we know what's going to come next. So we're just looking for a whipsawing. You'll see price always whipsaws out of contraction, always. So you can see more contraction. And you'll notice, guys, price respects these levels. Look at this. Look how price came and bounced exactly off of that level. Once you mark these out, you'll see this happening on your chart all the time. All these levels getting respected. These levels, guys, these value lines also become very strong support and resistance, as you can see over here. We got this break. Price broke above here. It found support at this level. Support, even got rejection wicks into this level. We got 2, 3 rejection wicks showing that price is rejecting, does not want to go lower. And this would have actually been an entry, because you can see we've got another contraction box over here. This is how we can get very precise entries. We've also got price tapping into a demand zone. So sometimes you want to add multiple confluences. So we would have seen prices on an uptrend. It broke above a high time frame value line. It's finding rejection into the high time frame value line. It's tapping into a demand zone, and it's underneath a value line here. So this would have been a long entry. If we look at our oscillator over here, we also get a shark fin. Whenever we get this green where price is breaking out of its band, this is our confirmation of these reversals. So we use this in combination with the indicator X just to get more confirmation as the best time to enter these trades. So this would have been a fantastic 4 hour entry. If we'd gotten in over here, I mean, we could have even gotten over here. We would have gotten a nice 18% on that trade. And you'll see if we have to work out liquidity lines, which the indicator does, these would be the liquidity lines. So, I mean, you can mark this out by hand, but it is very challenging because sometimes you get them wrong. But if we use the indicator will immediately just plot out these all-important levels for us, which really just makes trading, it simplifies trading. We don't need to think about it. And then we just know once we see a value line, we want to enter our longs only underneath it. You know, this is where people get tricked over here at this point. So you'll see if we did not have this indicator on and we get this big candle, most people are going to enter the long position right here. I'm telling you guys, I've seen this over and over, and you can probably relate to me. They're going to enter their long position and they're going to have their stop loss under the swing low. And then what's going to happen as they enter, price is going to turn around and it's going to liquidate them. And then the same thing's going to happen on the other side. They're going to see these big sell candles. See this big sell candle? And then they're going to enter their short position over here. And the stop loss is going to go above this swing high over here. And then what's going to happen? It's going to turn around and it's going to liquidate them. So this expansion phase is designed to take the money from you in the market. That is its purpose. This whipsaw phase, it expands below, it expands above, it expands below, it expands above. And then it finds supports. If it finds good enough support, it will now go into the trending phase. So we can watch out for this token, ZEC USDT. It might go into a trending phase now because we're finding support on this level. Can you see? It's like blocks. It finds support on this value line, then it broke above. Now it's finding support on this value line. But guys, you really want to understand these phases. You really want to understand these phases. I'm going to go over it one more time because it's just so important. Once I understood this, it changed how I trade, because now I can look at the market. I can immediately understand what phase the market is in. And then I can trade according to that phase. So I know if it's in the expansion phase, I trade according to expansion. If it's in contraction, I wait. There we go. And you'll notice that it always takes out liquidity. So I'll draw this a bit better than I did the last one, so you guys can get a better understanding of how it works. In my group, I give advanced training on how to use it. I've got so much training of examples, going into a lot of detail and depth, if that's your thing. See, so the indicator will do this automatically for you. It'll plot out your contraction zones, your value lines over here, and it will plot out these liquidity lines. And this is what we call a typical master pattern, guys. This is based on a branch of smart money concepts called the master pattern concepts. So we got phase one, contraction. Yeah. And then we got phase two. We got expansion. And then we got phase three, which is the trend phase. When you look at your charts again, try to see if you can identify these levels. Mark out your contraction points. Notice this, guys. You're going to see this pattern happening over and over. So how this happens, we go into contraction, price breaks out, and then it starts forming liquidity, and you'll see it takes out the liquidity, reverses, takes out liquidity. Because remember, guys, these are the stop losses. Retail traders, they place their stop losses above these swing high points. So the market makers go for these levels to take out the liquidity. And they take out the liquidity, reverse, take out liquidity, reverse. Once they've filled multiple positions, so maybe they'll fill a position, off your stop losses, fill a position. Once they got their positions filled, then they will decide to take the price to higher levels. Because remember, guys, the market makers, they move the market. They have the liquidity. So what we want to do, we want to emulate their strategy. We want to enter when they enter, because the smart money, the market makers, they're always doing the opposite of what the retailers do. So when the retailers are buying, you want to sell. When the retailers are selling, you want to buy. And this indicator helps you to emulate the market makers, to enter with the institutions, and to basically do exactly what they are doing. So it keeps you in alignment with their strategy. And then eventually they go into the trend phase, and this is where they take profits on their accumulated positions. So phase two is the the phase where they're accumulating, they're filling their positions, they're retailing, they're confusing the market. I mean, have you ever been in a trade where you enter long and it goes short, you enter short and it goes long? This is the phase, guys. This is the phase that's happening. And then all we want to do is make sure we enter our long positions under the value line, so that when price does decide to go into this third phase, we are in the wave, guys. It's like going surfing. You know, you're waiting for a good wave. You catch the best position in that wave. So when that wave does finally take off, you're riding that wave and you've got the best entry into that wave. And this is what Indicator X does for you. It just helps you to navigate that wave. The users can find the indicators. They can either click on the link below or they can go to www. Let me mark out over here. They can go over here to easyalgoindicators.com/sniperschool. And you can see we've got a lot of specials at the moment for monthly, yearly, quarterly, as well as now we have a lifetime option. So we've got the Indicator X, 3-day trial, Trend X, TDX. And guys, I've just added a new indicator, which is I'm basically launching. I'll give you guys a sneak peek into it. It's a screener. So what the screener does is it works with Trend X over here, and it basically shows you the market, what's happening. So you can load all your assets in here, and you can see over here, is the market above the daily grid? Is it, if it's an X, it's below the grid. If it's a dot, it's in the middle of the grid. And if it's a tick, it's above the grid. So we want to look, see right now, we want to look for assets that have three ticks or 3 crosses. So right now is not the best assets to trade, but this screener is basically going to show you exactly when is the best time to enter your trades. So you can put your favorite tokens in here and you can observe it at a glance, and immediately it'll tell you the trend of your asset. Is it an uptrend? Is it a downtrend? Is it a narrow grid? Is it a trending market? So you'll be able to figure out, is it uptrend, downtrend? Is it a ranging market or is it a trending market? So then you'll know, if you've got your assets here, you'll know which are the best ones to trade for that day. So this is very new. It hasn't even been launched, but I'm launching it into my group this weekend, which is very exciting. Been working on this for a few months now. So any more questions? Yeah, so this is basically what you get with the lifetime. After you get all the indicators and the TrendX screener, plus VIP Discord, where I give live training twice a week. It's also got courses. I've got a course for every indicator, very detailed course. And then we've got different deals if you want monthly, yearly, or half yearly. But the best deal at the moment is the lifetime package. But go through, guys, check out the trial. I would say go trial it. A lot of guys do the trial and then they see the value in it and then they only make that decision. But trial it out, test it out, see what you think. I can guarantee you it's very different from any other indicator you've ever done or used before. And I highly recommend it if you really want to take your trading to another level.